Results from Amazon just coming into the newsroom. AMZN on the NASDAQ. Fourth quarter results as follows. Net sales coming in at $213.39 billion. The estimate was $211.49, a Bloomberg estimate, so a beat there. Online store net sales, just shy of $83 billion. The estimate had been $82.3. Physical stores net sales, $5.86 billion. The estimate had been $5.88, so a little bit of a miss there. Subscription services net sales, $13.12 billion. The estimate had been $12.74, so a beat. Here's a key one. AWS net sales, $35.58 billion. The estimate had been $34.88 billion, so a beat for Amazon there. Earnings per share coming in at $1.95. Estimate was $1.96, so a bit of a miss there. Here are some key metrics. First quarter outlook, so the forecast. Amazon sees first quarter net sales coming in at $173.5 billion to $178.5. The estimate in the middle at $175.54. And then the key capex number that investors have been concerned about. Capex for 2026 spending coming in at about $200 billion. And the estimate was 146.1. So a major disconnect in capex spending from what was expected. Let's go to Alonzo Munoz on this, Chief Investment Officer at Hamilton Capital Partners. He joins us now to digest some of this. Thanks for joining us today. Let's start with capex. Do you see that amount of capex spending as warranted by this company?
Marilla, good afternoon. Good to be here. Well, clearly in the price action after market, investors are not liking this. We'll see if maybe we get a little bit of recovery as we all get on the earnings call here at 5 o'clock. But this is what we've been seeing as a trend in the market. These hyperscalers, these large tech companies, and Amazon here at their earnings reporting tremendous capex. I mean, absolutely staggering. And we expected it a little bit. I mean, it really is a race to build out the AI infrastructure and to be a leader. We think that ultimately this is a good thing. This is what these companies have to do. And Amazon specifically, that we see not only as a tech company, but it's really in that consumer discretionary. It serves, consumers all over the world. And we saw some strong numbers from AWS. So we think that the capex is strong. The market's obviously going to have a reaction to it. And we're going to be watching that earnings call very closely.
As you know, Alonzo, the investors want to see return on investment. And I'm looking first at AWS net sales, which did beat. But do you think they beat enough? It was $35.58 billion, estimate at $34.88.
Well, Marilla, that's exactly the point. I mean, we're really scrutinizing AWS and their cloud because it makes up such a big portion of their operating income, and they're becoming ever more reliant on growth in cloud to drive that future prospect, specifically as we potentially go into a slower economy, the consumer pulls back. But the numbers were okay. I know we've only had a couple of minutes to start to look through the numbers and really dig into the details, but margins were okay. That their online sales were okay. AWS a little bit higher than expected. It's going to be a little bit bumpy here for Amazon, but ultimately this is an opportunity for investors that like the company, that see the vision to start to average into this company. It's down on the year. It's underperforming its sector, and we think it has some upside.
Okay, so let's pull up the after hours and take a look again at how investors are reacting to this. Because as you mentioned, when we first had it up, they weren't too happy, especially and likely because of the capex spending being so far from the estimate at $200 billion for 2026. And it is still trending down. So now down 8.3%. That's an $18.43 drop. $204.26 is where Amazon stands in the after hours right now. And just a reminder for viewers that the numbers have come in and they beat on a couple of things, but they weren't major beats. Earnings per share coming in a bit of not a beat there, a miss there, 195. The estimate was 196. And then the first quarter outlook has net sales coming in for the first quarter, $173.5 billion to $178.5 billion. And that's inclusive in the sense that the estimate was 175.5, so that landed in the middle. AWS, which we were just discussing, coming in at $35.58 billion. That's a key one for this company. The estimate had been $34.88 billion. And then a number of other metrics to give you here. Physical store net sales coming in at $5.86 billion. A bit of a miss because the estimate was 5.88. Let's go back to Alonzo and take a look at some of the breakdown numbers. outside of AWS, online store sales, is that sort of the next most important metric you're looking at, or would it be subscription services at this point?
At this point, it really would be subscription services. We know that Amazon is rolling out Alexa Plus, and that hopefully is going to be a driver of revenue here in 2026 and beyond. We've seen some partnerships as well with OpenAI, and so we're really trying to think outside the box for Amazon and how they deliver to shareholders on some of these promises that they're making and differentiating themselves in a space that has become rather fickle. I mean, if you think about what we've seen in the last couple of weeks is big market reactions to high capex or underperformance relative to other AI companies that are either developing faster or bringing products and services to market. Amazon's going to have a tough time, but I think on a positive note, we've seen Andy really position this company as the next world's largest startup, if you will. We saw some job cuts, at least in the last couple of weeks. We saw job cuts last October. But I think ultimately we're really going to rely on this earnings call to see what they have in stock for this year and how they're going to develop and how they're going to turn this $200 billion in capex into meaningful returns for shareholders and for the company itself.
All right, Alonzo, we'll leave it there. Thanks for joining us. Alonzo Munoz, Chief Investment Officer, Hamilton Capital Partners.